Welcome to our quarterly market update for the September quarter 2025. And with markets falling over themselves to reach new all-time highs over this quarter, perhaps the best way to sum up the quarter is stay calm and carry on. Despite continuing geopolitics, wars in Gaza and Ukraine, Chinese flexing some muscle around Taiwan, markets don't seem to care. In the US, rising prices, slower economic growth, weak labour market, markets don't seem to care. US government shutdown that's just happened this week, first in 7 years, markets definitely don't care about that. So, what could possibly go wrong? In the US, the Federal Reserve over there during the quarter cut interest rates by 25 bips, widely expected by the market. The Federal Reserve noted that inflation was ticking up. So this brings about the spectra of the dreaded stagflation. So stagflation is when there's high inflation but low economic growth. It's a bad thing. Now, despite these flashing red lights and warnings out there, of course, we're reminded of the words of John Maynard Keynes, is that the market can stay irrational a lot longer than you can stay liquid, which just means that financial markets can ignore rational behaviour for extended periods. Let's have a quick look at the Australian market, which has had a very good quarter and overall a great year. You can see in the chart that big dip that happened on April the 2nd. Of course, that was due to the announcement of tariffs. Since then, it doesn't matter what anyone says about tariffs, markets don't care. Turning our attention to global markets, so when you look at developed markets, up about 23%. Now, in the past couple of quarters that we've done this, we've been talking about how it's been all driven by the US. It's been the biggest performer. It is the biggest part of the developed markets, about 70%. But this time, when you look at the other big markets there, Europe and Japan, they're all returning over the 12-month period about the same. It's a very even performance over the 12-month period. And even the emerging markets, which have really been lagging for a couple of years, they're also returning much the same. Now, just a note on the emerging markets, they're dominated by China, that's over 30% of that market. And the Chinese stock market, it's on a tear. It's up 36% over the full 12 months. But up a staggering 20% just in this quarter. Now, in this case, the Chinese government do care. They can see that that is an exuberance which is just going to have to pop. So the authorities there are looking at ways to cool that market down a little bit. It's hard to mention what's been going on this quarter in markets without mentioning one particular asset, and that's gold. Up a staggering 17% in the quarter and 45% for the year. Now, the gold price is going up as the US dollar index, that's how the US dollar is against a basket of currencies, not just the Aussie dollar. And you can see as the US dollar index has been losing favour, gold has been rising up. So demand for gold is primarily driven by central banks. As other countries look at the US as no longer really being the safe haven that it used to be, they're turning their US dollars, such as treasury bonds, into gold. Well, that's it for the quarter. Again, it's very much a case of stay calm and carry on. And to be honest, that's not a bad philosophy. Ignore all the bad news. Yes, markets are going to come down sooner or later. I don't know when. I don't know why. I don't know how. But markets do go up and down. But the best way you can handle that is by being disciplined and staying in your portfolio for the long term and enjoying the periods that we're seeing now when they happen. I'm Steve Garth. Thank you for watching.